Welcome to the Fear and Greed Business News Afternoon Report for Friday, the 3rd of November 2023. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 rose another 1% today to finish at 6,978 points. The bourse finished up more than 2% for the week. Real estate investment trusts and industrials did best today, while healthcare companies and financials also outperformed. Energy stocks did worst on the back of falling oil prices, while more defensive sectors like consumer staples, utilities and telcos underperformed. Driving the market in the past couple of days has been the decision by the US Federal Reserve to not lift interest rates and commentary that suggests there might not be any more rate rises in the world's biggest economy. CSL did well today, up 2.5%, as was Transurban. Goodman Group and REA were both up 2%, while Commonwealth Bank, Wesfarmers and Newmont, i.e. Newcrest, all rose around 1.5%. Treasury Wine Estates started trading again today after its announcement this week that it was spending $1.6 billion buying a Californian winemaker. Its share price fell 8.5%, the worst on the bourse. Best was Block, owner of Afterpay, after its September quarter earnings results overnight on Wall Street. It ended the day up 25%. Story number 2, today's Qantas AGM was a tense affair, with Chair Richard Goyder having his hands full in response to some pretty pointed questions around the share price, benefits to the Prime Minister's son, the use of loyalty credits, etc., etc. The remuneration report was the pointy end of the meeting, and 83% of shareholders voted against the report. That's the report that includes CEO Alan Joyce leaving with $21.4 million. Goyder called it a very clear message from shareholders, somewhat of an understatement. Remuneration Committee Chair Jacqueline Hay told the general meeting that clawback provisions in Mr Joyce's contract could still see him lose $14.4 million worth of entitlements. No message on whether that's actually going to happen, though. Earlier, all directors, including admin Todd Sampson, were re-elected to the board. The board, including new Chief Executive Vanessa Hudson, were broadly apologetic for what's happened at the national carrier. Story number 3, Macquarie Group's first half profit tumbled 39%, but that didn't prevent the board from agreeing to a $2 billion share buyback. Market volatility and fewer opportunities to buy and sell assets were behind the poor performance for the 6 months to the end of September. Net profit was down to $1.4 billion for that half year, below expectations. But Macquarie's share price closed up 1%. Given the global economic conditions, persistent inflation and geopolitical events, Macquarie will take a more conservative approach in coming months. There were falls in earnings in the asset management business, the investment bank, in its commodities and global markets business. The Americas, Europe, Middle East, Africa and Asia now make up nearly 2/3 of Macquarie's income and roughly half of its 21,000 employees. Story number 4, Atlassian, the Wall Street-listed Aussie software company, this morning announced larger losses than expected, sending its share price down 10% in after-hours trading. The company's result wasn't a disaster. It made a net loss of $32 million for the September quarter, but it was worse than the June quarter when it lost $14 million. Revenue was higher, but investors just aren't that enamored with loss-making tech stocks at the moment. Atlassian has over 40,000 customers who spend more than $10,000 in annualized recurring revenue terms, the company told investors, a number which has grown from 25,000 2 years ago. And finally, story number 5, FTX founder Sam Bankman-Fried's spectacular rise and fall in the cryptocurrency industry, a journey that included his testimony before Congress, a Super Bowl advertisement, and dreams of a future run for president, hit a new bottom overnight when a New York jury convicted him of fraud in a scheme that cheated customers and investors of at least $10 billion. After the month-long trial, jurors rejected Bankman-Fried's claim during 4 days on the witness stand that he never committed fraud or meant to cheat customers before FTX, once the world's second largest crypto exchange, collapsed into bankruptcy a year ago. That's according to a report on Associated Press. US Attorney Daniel Sassoon said Bankman-Fried turned his customers' accounts into his personal piggy bank as up to $14 billion disappeared. That's it for the afternoon report for Friday, the 3rd of November, 2023. Adam Lang, guest judge Jennifer Duke, and I will be back tomorrow morning with a weekend edition of Fear and Greed Business News. I'm Sean Aylmer. Enjoy your evening.